Hello, welcome to The Point of View. This is your favorite current affairs show on television. It's on Citi TV every Monday and Wednesday. My name is Bernard Avle. On The Point of View, we pick the right topics, we get the right guests, we ask them all the relevant questions, and your useful insights will come your way. It's live and interactive. If you're watching on television, there's a WhatsApp number on the screen. Send your questions and comments. If you're watching on Facebook, there's also a comment section where you can tell us what's on. Well, we're dealing with the biggest story in Ghana today. 53 fund management companies have evaporated. We'll be asking the regulator how. We have a few questions for him. We want you to also question him yourself. When we come back, I'll tell you more about the program. Stay with us. So the Securities and Exchange Commission, pursuant to its mandate to protect investors, maintain surveillance, and monitor solvency, and protect the integrity of the securities market, carried out on-site and off-site supervisory activities, including reviewing of reports, on-site inspection, forensic audits, and complaints. They identified about 10 infractions that some of our fund management companies were involved in, and they subsequently revoked their licenses, or essentially said these companies can no longer exist to do the kind of business they do. This was on Friday. So we have Rev Dr Ogbarmey-Tetteh. He is Daniel, is his name, the wise Daniel. He is the Director General of the SEC. He's here to answer your questions. Reverend, great to have you.
Thank you, Bernard. I'm glad to be here.
I was wondering how the president or the government appointed people. When they were looking for somebody to protect the capital market, they needed an osofo. So they got an osofo who is also a doctor on top. So it means they expect our money to be in good hands. It's great to have you on the show.
I'm happy to be here.
Great. Before we talk about what you're doing, I need to give some context to viewers. So what is happening this month is really a continuation of a long-drawn process. Some people say it started in 2015, but let's start with August 2017. So I'm going to show you a few things that have happened. August 2017 was when UT and Capital Bank had their licenses revoked. A receiver was appointed, and these two banks became part, or what was left of these two banks became part of GCB Bank. Fast forward, August 2018, 5 more banks merged into one. Unibank, Construction Bank, Beige Bank, Heritage Bank, and the Royal Bank. That's now Consolidated Bank. In all, 9 banks lost their licenses. Well, 2 banks survived, if you want to put it that way. But that wasn't all. We've had a series of license revocations. We've had 22 finance houses and savings and loans companies within the period also disappear. These are also Bank of Ghana regulated institutions. Then we've had 347 microfinance. They also disappeared for various infractions. Now, that means we've had 420 organizations regulated by the BOG disappearing, vanishing into thin air because of a whole series of things that they did. As if that were not big enough, now we have the SEC saying 53 of our fund management companies are not fit for purpose. They can't exist, they are insolvent, or they are not performing their role. So those 53 are also gone. So when you add 53 to 420, you have 473, almost 500 companies in a period of 2 years. What is going on? Reverend, we cannot discuss what you are doing without looking at the financial sector itself. What is the relationship between the fund management companies you regulate and the institutions I've just spoken about, banks, savings and loans, microfinance? What's the relationship between these companies?
Okay, so basically, they are part of the financial sector. Now, in terms of the fund management companies, their role really is managing assets. They manage assets for individuals or retail clients, for institutions, and for high net worth clients, pension funds, and so on and so forth. Now, in managing these funds, they have to make a determination as to which instruments they would invest the funds in. So we have what we call the investment universe that the fund managers need to play in. And if you take the investment universe, there are 2 main broad categories. You can talk about equities, and then you can talk about fixed income. Now, you may get a number of variations, but broadly, you invest in equities, that's the listed stocks, or fixed income. Now, when you talk about fixed income, you're talking about things like Government of Ghana bills, so the treasury bills, bonds, and so on and so forth. You can also have corporate bonds. You can have things like fixed deposits that banks are authorized to issue, savings and loans companies, and so on and so forth. So basically, you find that our fund managers, in executing the mandates they have to manage money on behalf of their clients, they tend to place money or invest money with the firms regulated by the Bank of Ghana, because they typically offer a number of fixed income instruments. Okay, so that is the kind of relationship that you find between the fund managers and then the firms regulated by the Bank of Ghana.
So when did the regulator, being the SEC, notice that something was going wrong?
The way I want you to look at it is the fact that regulation is an ongoing activity. So I think you alluded to that even in your introduction, the fact that SEC, one of our mandates is to ensure the surveillance of the market, to monitor the solvency of our operators. So we do what we call on-site and then off-site inspections, during which we go through the books. We want to confirm whether the fund managers are doing what they need to do. And then also when the fund managers file the returns, they file monthly returns, quarterly returns, semi-annual and annual returns. We also do some analysis, and that would give us an idea of how they are managing their various shops. And then from time to time, we may also receive complaints from investors, especially when it comes to non-payment of the monies that they would have invested with the clients. So what typically happens is that if, let's say, you go on an inspection, an on-site visit, or from your off-site analysis, you pick up some things, what you do is to flag it. Okay, so for instance, after the on-site inspections, the team from SEC would have an exit meeting with the fund manager, and then they also issue a report. Okay, so when there are issues that need to be addressed, they'll be flagged in the report, and then after some time, the team would go back to confirm whether the issues have been dealt with. So we can say that it's not an issue of something that just happened recently, but over
it's something
time,
that builds up.
Exactly.
So you do on-site and off-site, mean that you go to the company,
yes,
and look through their books.
Yes.
And then you also get them submit reports to you.
Correct.
That's the off-site.
Correct.
How frequently do you do on-site?
So because of the number of licensed fund managers, you realize that we are unable to cover the entire spectrum every year. So for instance, let me give you some context. So we have, we had 148 licensed fund managers.
Wow.
And then the entire workforce of SEC is 61. You have a situation,
from security man to you?
Exactly.
61?
Yes. And
wow.
We have a situation where our operations are also very manual. So if you take the team that focuses on funds management, if I'm not mistaken, and I think the team is 9. So 9 or 10.
9 supervisors of the fund management companies?
Yes, because we have different teams that focus on different areas. For instance, we have broker dealers. They focus on the brokers, dealers, and advisors. Then we have funds management. We have exchanges and markets. They focus on the securities exchanges that we have.
So that's 3. You have 3 supervisory subsections.
Yes, mainly. But we have issuers. Issuers, what they do is when a company is going to make an invitation to the public, either by raising a bond or doing an IPO in terms of shares, they'll bring their prospectus for examination and approval, as well as other business combinations like mergers, and so on and so forth.
That's not, so you have exchange markets.
Exchanges and markets.
That's the Ghana Stock Exchange.
Well, we have Ghana Securities Exchange, and then they also
Commodities
have
Exchange.
The Commodities Exchange, and then they also
the Ghana Alternative Exchange.
Well,
that's different.
So Ghana Stock Exchange hosts 3 trading platforms.
And you regulate all of that.
Yes.
And then you regulate the broker dealers.
Dealers.
You regulate the fund managers.
Yes.
And then also issuers.
Yes.
And you have 61 staff.
Yes.
Including one security man. How many security men?
So the security is contracted out.
Drivers.
But you're talking about drivers.
Cleaners.
And
receptionists.
Cleaning is also...
so how many proper regulatory officers do you have?
So I would put it around 44.
And you're regulating all these people?
Yes. So,
and how frequently do they give you... So let's come to the people we are dealing with, these fund managers. How often do you do on-site visits?
So that's what I'm saying, that, given the number and given the resources available, we are unable to cover all of them in a given year. So that is what it is.
So in a year, you may not talk to somebody for a whole year?
Oh, yes. But
one whole year?
In terms of on-site. But everyone submits returns.
But how do you validate the return if the person is sitting under some mango tree somewhere and is manufacturing things for you? The whole year you haven't gone there.
So that's what I'm saying, that at the time they are getting the license, we do all the inspections to be sure of where they're operating from, and so on and so forth. But in terms of ongoing basis, practically, we can't cover everyone in a financial year.
How often do they send you reports, these fund managers, companies?
There are monthly returns, there are quarterly returns, there are half-yearly returns, and then there are annual returns that...
So what form does a monthly return? How thick will a monthly return be? Will it be like one sheet of paper or a booklet?
It will depend on the fund manager, because depending on how big you are, or how big your what do you call it?
Portfolio is.
Yes, so.
But there should be a standard template.
No,
because your fund management, your monthly report should have certain things.
No, there is. I'm just saying that. So if, let's say, you are, we have let's say the quarterly return, we ask you for a placement report. The placement report will show you the different placements that you have made. Take someone who, for instance, manages a number of collective investment schemes. Another person just doesn't have any collective investment schemes, maybe just manages pension funds, and then maybe a few high notes. So I'm just saying that depending on the portfolio, the volume of the reporting would differ. But there's a standard. It's not like anybody submits anything.
So of these 44 people you have, how many of them deal with the fund managers? 9.
Yes.
These 9 people?
Yes.
So they will receive 153 monthly reports every month.
So
and then every quarter they will receive another 153.
Yes.
And then every half year they will receive another 153.
Yes.
And then they receive
148. Then
148 companies. But 148 companies.
At the time we came up with our announcement, the number was 141 because a few had voluntarily submitted their licenses, and I think
every month each of your 9 staff would read about 12 to 15 fund management reports.
Thereabouts. It's been assigned, so the team lead has assigned the different accounts to the team members. So, but yes, we can use an average number to signal that.
Now, I asked this question and you said it's a continuum. Did the fund management crisis predate the banking and savings and loans crisis, occur in conjunction or occurred afterwards? I'm asking this in the sense of the flow of money, because I have heard fund managers say they are victims of the banking sector crisis because their monies were locked up with institutions that collapsed, right? So if you look at the whole system, did the fund management company's problem predate, happen simultaneously, or was a consequence of the banking sector crisis?
I wouldn't say it was a consequence of. I would want to say that it would have happened simultaneously, because it's an ongoing activity. And you find that, for instance, a fund manager may invest with a particular entity and may roll over instead of taking the money. It could be, for instance, that at the time that the first investment was made, things were okay. But in the course of time, in rolling over, things could have gone bad without maybe the fund manager picking up the signal. So, but to say that it's a consequence of the crisis, I think it won't be an accurate representation of the situation, because the reality is that there's that interconnectedness, between the fund managers and then the firms regulated by the BOG.
So it's not one leading to the other, it's mixed. So some fund manager can lock their money somewhere, these people too can affect this, everybody's affecting everybody.
Because what we've actually found is that, interestingly, some of the firms regulated by Bank of Ghana also place money with the fund managers. So you see that, flow of money this way and then that way. So I think to say that, this one led to that wouldn't be fair.
So you have 148 organizations you are regulating as fund managers. What is the size of the portfolio they hold or held when things were going well?
So the as at March of this year, the total assets under management within the industry was 25 billion.
25 billion Ghana cedis?
Yes.
Wow. 25 billion, that's around $5 billion.
Yes, thereabouts.
Which is like a tenth of our GDP. 25 billion, that's at March.
Yes.
So the 53 that have collapsed, we are told that their portfolio was 8 billion cedis. Is that correct?
That's correct.
So that's about 2/5, or that's about a third. That's about 1/3, 8 3 24. So about 1/3. Because it's 25 billion and these are 8, so 8 3. So they're about. So a third of the fund management market became toxic, or they just toxic is not the right word.
Yes, and I'll explain. So out of the 8 billion that the firms affected by this enforcement action were managing, as much as 2.5 billion would be in Government of Ghana bills, listed equities, and then banks. Because some of these firms, for instance, manage pension funds. And you realize that pension assets, given the regulation that governs it, you can't invest it in various instruments. There are strict guidelines as to where you can take or place the pension assets. So you find that not all the 8.5 billion is necessarily money that is lost or money that has become toxic. You need to take it line by line and then do an assessment. So it is inaccurate to say that 8 billion has been lost. It is not accurate.
So 2.5 of that 8 billion can be salvaged because some of it is GOG, some of it is listed.
Basically, because Government of Ghana
will pay. But we can still say about 5 billion cannot be accounted for now.
Well, we'll have to look into it. Now, if you look, at the breakdown, I think about 4 billion is what would have gone into SMEs and SMEs and commercial paper. Now, you will need to take it, if you like, go drill down to determine, whether really the money is lost or not. But the challenges that have emerged in the sense of the fund managers being unable to basically pay client redemptions may be a sign that those investments may be problematic. But we also need to remember that in there you find some investment in real estate. So let's say a fund manager has put short-term money in a long-term instrument. So while liquidity will be a challenge, the asset may be there that can be, as it were, recovered, to...
But if I go and give my money to a fund manager, can they go and use that money to build a house for somebody? Or can they use it to give us a loan to an SME to do a business?
So the way the fund managers I'll answer your question, but let me just clarify something. The way the fund managers gave money to SMEs is in the form of instruments like commercial paper, or what they may term structured finance or debenture. But it's essentially, it's like giving a loan. But the investment universe available to fund managers would include things like commercial paper and so on and so forth. So even as a commission, we have guidelines on the issuance of commercial paper. But the question you asked here is where the problem is. Now, ideally, when you take your money to a fund manager, there is a need for the fund manager to sell you a product that is suitable to you. In other words, the fund manager needs to profile you in terms of your objectives, in terms of your risk tolerance, in terms of how much time you have to access the investments. Then the fund manager is supposed to show you that with these different types of investment solutions, the risk return characteristics is like this or is like that. And then to help you make a determination as to what would work for you. So the fund manager is supposed to advise you and let you know that these are the options, these are the underlying characteristics. This one is high risk, this one is medium risk, this one is low risk, and so on and so forth. So the ideal is for fund managers not only to profile the investors and guide them to making the right investment choices, but they also need to disclose to the investors as to where they are making the investment. Because the point is, we all differ in our risk tolerance or risk appetite. But at least let me know that where you are taking my money into, it's into real estate, or it's into this, or it's into that. And this is the risk that goes with it.
Doesn't your supervision determine whether the risk threshold that the fund manager is taking is within reasonable limits? Because number one, we have no deposit insurance in Ghana. Number two, the cushion that a bank say has to keep against risk is many, many times higher than what a fund management company has.
They don't even keep any.
Good. So there's no deposit insurance. There's no cushion, using that term very loosely. So does your monitoring include a risk analysis to say you are behaving in you are taking too much risk and therefore you are endangering people's investments?
I'll say yes and no, and I'll explain why I say so. Now, the fund manager basically works with the mandates of the clients. Okay. Now, if you have a young person, maybe young as you or younger, right? And the person has got a tolerance for risk. Okay. The person will be ready to, take that risk and will give you your matching orders. Okay. As a regulator, I cannot come and say that you are taking too much risk, because you are the one who has the capacity or the ability or the willingness to take the risk. But my interest will be, has the fund manager shown you or explained to you the trade-off between the risk and the return that you are taking? So that's one side. But when we look at the returns that are found, and for instance, we see things like over-concentration, where, let's say, a fund manager, you find that, the portfolio has been skewed to a particular instrument or vehicle, then the schedule officer will flag it and say, your portfolio needs some rebalancing. Now, when it comes to rebalancing a portfolio, if you talk to any fund manager, it may take some time. So, because market conditions can impact on the portfolio to the extent that they can go out of the out of balance in terms of out of the projected structure that has been agreed upon. So you flag it, and then it's up to the fund manager to take steps to rebalance the portfolio, because over concentration.
Yeah, but you are making it sound advisory. But if I go to Regulation 28, you are obliged to monitor a number of things. This is your own law. SEC Regulation 2003, unless it has changed, with the LI 1728. You are to monitor liquidity. You are to monitor abuse of deposits from clients. You are to monitor internal control and compliance. If a fund management company becomes illiquid, the penalty, we are told, is they are liable to a penalty of 1 million cedis for each day the default subsists, and shall have their license suspended if the period of default exceeds 30 days. So, yes, you can monitor risk and advise, but your law says if, for example, someone is not able to pay its depositors, you have to fine them and suspend their license. Who have you fined since you started monitoring these companies?
I think you're reading the wrong regulation. This has to do with the liquidity of the fund manager. Now, and you have to differentiate between the liquidity of the fund manager and then the liquidity of the portfolio. Now, as a fund manager, when you're structuring a portfolio, remember that the objective is to generally, maybe to grow the funds. Of course, you can have an objective of maintaining or preserving the funds you are managing. Depending on the objective, you structure the funds. But typically, you build into the fund structure, the portfolio structure, provision for liquidity, because you will have to understand the asset owners or those whose monies are in that portfolio, what liquidity needs they will have. And you need to make room for contingency. So you
so you are saying that what I'm reading is in reference to liquidity of the portfolio?
No, liquidity of the fund manager itself.
So
and I'm saying that you have to distinguish between.
Okay, so if somebody goes to, if I give money to Gold Coast, I give them 10,000 cedis.
Yes.
And they are not paying me what I am due. Is it liquidity of the portfolio or the fund manager?
It will be liquidity of the portfolio.
Which is not what this is talking about.
No.
So, but if the portfolio is illiquid,
yes,
and the fund manager is liquid, they should be able to pay me.
Why should the fund manager pay you from his resources? That's what I'm saying, that you have to distinguish between the liquidity of the fund manager and then the liquidity of the portfolio. Okay, and a good fund manager, your job is to structure the portfolio and build in that liquidity, okay, to meet the needs of the client. Let me give you an example. If, let's say, you are managing an equity portfolio, you know that an equity portfolio, or maybe an equity fund, you know that equities generally are not very liquid, depending on dynamics.
The way the stock market is behaving.
Exactly. Okay, so if you are managing, let's say, an equity fund, it will be prudent for you to keep maybe about 10% or whatever, 15, 20% in, let's say, money market instruments to take care of liquidity. If you put all the 100%, everything into equities, clearly you are setting yourself up to fail in paying clients' monies when they request. Okay, so it's about.
So that's illiquidity of a portfolio,
yes,
which you have to monitor. But I guess liquidity of a portfolio can result in the liquidity challenge of a fund manager. Because if all your portfolios are illiquid, there's no way you can be liquid yourself unless you are giving free money. Because your fund manager is only as good as the portfolio it manages. So I think your technical distinction may be intellectually great, but in practice, if a company cannot pay its depositors, it means, number one, the portfolio is illiquid. And number two, because people come to you with an investment expectation, you have a relationship, you are the one who's the expert, you can't find any money to pay them, we can subsume that you are illiquid both portfolio-wise and as a company. So my question is, have you taken any action against? And again, you gave us a very detailed breakdown of the people's infractions. Somebody gave 99.4% of people's investments to a related company that was not regulated. Somebody gave 77% of people's deposits in commercial paper. You stated that. So clearly, this is not a prudent management of portfolio. So my question still stands. If the law says a company should maintain certain levels of liquidity, there's something called depositors, clients, abuse of deposits. Can we construe giving 99% of somebody's money to a related company not regulated as abuse?
That's why if you look at the main condition we cited for the revocation, Section 122, 2B, we talked about where the fund manager hasn't behaved honestly, efficiently, and fairly, because they didn't apply all the necessary professional expertise in delivering on the job. To answer your question directly, yes, in our quarterly reports which we publish, you'll find that we list the firms that have been fined for various infractions. Okay, I don't.
So you find some of them?
Oh yes, we do. We find them, and so it's an ongoing activity. Now, if let's say you go for an inspection or from the returns submitted, there's an infraction and you fine, then you allow some time and you do another inspection. If it's repeated, if it's persistent, then it signals that there is a problem, okay? And then it calls for an escalated action where that particular firm is concerned. But I really would want you to know that the liquidity of the fund manager is not equal to the liquidity of the portfolio. I think that distinction has to be very clear, that a fund manager is, even though I guess your point is that if you are managing a portfolio that is not liquid, how are you making your revenue, or how are you making your money for you to be liquid? And that is another conversation altogether.
All right. We all need a drink of water. This is the point of view. We're trying to understand the SEC's decision of revoking the licenses of 53 fund management companies, and this is the latest in the series of things happening in Ghana's financial sector. We have lots of questions you've sent. We'll ask Rev Dr Daniel Ogbarmey-Tetteh. Stay with us. Welcome back to The Point of View. Tonight we're trying to understand the unraveling of 53 of our 148 fund management companies. About a third of them have evaporated into thin air. The SEC revoked their licenses because of a lot of sins. The sins are listed here. There are about 10 sins. Guaranteeing of returns contrary to directive of the Commission, failure to honor clients' redemption requests, failure to honor payments, terms agreed at complaint hearings, failure to place clients' funds with proper due diligence and requisite standard of professional conduct, evidenced by overconcentration of portfolios in high-risk institutions and related party transactions resulting in severe liquidity challenges, which is why my liquidity point came in. Failure to segregate client funds from operational funds, and in some cases using client funds to pay for operational activities. Again, that goes back to what I read. That's abuse.
Yes.
Closure of offices without following due process. Persistent regulatory breaches, including failure to submit reports as required. Corporate governance weaknesses. Failure to monitor and inject liquidity. Let me give you a flavor of the kind of agitation that has been going around. Gold Coast, which later became Black Shield, is the largest of these companies. Only 3 weeks ago, they hit the streets to demonstrate. Frema Eduyame brought through this report.
Everything is gone down. Everything. And I'm from Obuasi. Everything is gone. Everything. Because I have to use the same money to take care of the children. It's not only my money is there, my husband too. So it's like both of us, we are down at this moment. So this time, I'm just pleading and asking the government to intervene. Because at this moment, we are dying. We are dying. And hospital, children's school fees, and then other things. So we are dying. We are really dying.
Pensioners are dying. 70% of our customers are pensioners. I don't want to mention names here. I swear God, I know 3 people who passed on because of this issue. I swear God, I'll never swear God for nothing. I'm a Muslim. I know what my religion says about you swearing. I just started last year. Last year, I can't get my principal, not even talk of interest. Can I even think of interest again? Now I just need what I've invested. I don't need interest. They should just give me my money. A lot. My wife had a miscarriage out of this. I visit a private hospital whenever she's pregnant. But because of this thing, where can I get money to take her to the private hospital? I was compelled to rely on the normal, health service. And the result was what? I don't even want to talk about it again. So the government is aware of this problem. No, it is the government that is causing this problem, not Indum.
The government to come in right now, take our petition. If the chief of staff can come, deputy, vice president, whoever that is in government, take our petition. Listen, we have petitioned SEC because we know they regulate this company. But to say, sorry, we will talk to you tomorrow. No respect, no, they don't. They're as if SEC is dead. So for me, if you ask me what's on my mind, the government, SEC, and Christendom are sleeping on one bed.
All right, so personally, how has this affected your life?
Hey, look at my condition. Every month, at least every month, I have to go to the hospital. Tell me, how do I go?
On an average, how much do you spend when you go to the hospital?
My consultation fee alone is 300 Ghana cedis because the national health insurance doesn't work. It doesn't, my daughter.
Wow. She said the government, SEC and Christendom, they are sleeping on the same bed. It must be a large bed. But it looks like you've thrown Indum off the bed because now he has nothing left. I mean, they said they petitioned you didn't mind them. This is what one of the people said. I'm not sure if you can comment to that specific issue. And also, the demonstrators said you should intervene. So they were expecting pay, but you've now closed down the companies completely. So where does that leave them?
Ben, so basically the intervention that the clients, not only of Gold Coast, but of the firms that have been affected by this enforcement action have been looking for is basically how they can have their money. So this, if you ask me, is the kind of intervention that would basically help to let them realize their aspiration. Now, the government, has made a commitment to provide immediate relief in terms of providing some amount of money that can be paid, a capped amount that will be paid to investors, of course, after some validation process, because before the government will make a payout, they'll have to find a basis on which they'll make the payout. So there'll be a validation of those who have investment with these affected firms, and then they'll get that immediate relief. What we did say in our notice was that we have notified the Registrar General who will petition the court for the power to liquidate these firms. The intention or the reason for that is so that the assets can be ring-fenced and realized, and then out of the proceeds of the assets, the clients can again be sorted out. So what government is doing is like an immediate relief that because the court process, we can't put a time frame on it. We expect that it will be accelerated, but as an interim measure, government is saying that let's have some payout, a capped amount that will provide immediate relief. So that's the kind of intervention that I believe will help. Because really, the clients have been struggling. I mean, from the clip you just played, they don't have any joy because they're not having access to.
So when you say you are paying them a capped amount, what does it mean? Because everybody's investment is different. The length of time they've invested and expected return is different.
Absolutely.
So are you paying them their principal, or you are paying them a percentage of the amount they expect? When you say, what do you mean by a capped amount?
So a capped amount is that the amount will be limited to a certain threshold, but that will be determined after.
That's an amount of money, not a percentage of.
I didn't say an amount. I said a threshold. Now a threshold can be a fixed amount or it can be a percentage. I'm just saying
so which are you doing?
No, we will determine that when we have gone through the validation process. Now, the challenge which I need to put out is the fact that our focus as a commission hasn't been on the liability side of the fund managers. We focus on the asset side. In other words, where are they investing the money? Okay, so if you ask me, I can't give you details of all whoever contributed this. So it's difficult.
But you know where they invested the money, because in your statement,
I'm not talking about where. I'm saying that where the money came from.
Okay.
That is, we don't have
that information yet.
Yes, it's not information that we have been collecting. Going forward, we intend to collect. Now, without that information, you can't begin to set a threshold and say that you give a fixed
So
amount.
you are very clear where they put the monies.
Yes.
And you know that some of those places were not appropriate. But you also know, but you said you have 77,000 customers, which includes institutional and individuals.
That is the estimated number of customers.
And we are told this includes churches, this includes
various
credit unions.
Yes.
So are you going to use any order of priority in payment?
That's what I'm saying, that when it comes to what government has promised to give out, after the validation process, we'll get a better view of the exposures in terms of who, so if you take retail clients, what is the quantum and what is the amount per person or the average? If you take institutions, then based on that, we can have a more informed basis to set the cap,
the amount,
or
the percentage, or
yes,
whatever it will be.
Or whatever it will be.
But why did you liquidate? Why did you revoke license? Because some people feel that looking at what happened with the banks, we lost a lot of jobs. A lot of related industries also went down. So in retrospect, we could have found a way of saving some of these companies and sort of administering them to come back to the straight and narrow. So are you saying that these 53 companies were beyond redemption?
I'm smiling because, Bernard, the question that you have asked, I was asked that question, that could any of these firms, could they have been saved? Mm-hmm. And my answer was that the regulator will typically have that viewpoint, mm-hmm. That, let's see whether we can save the situation. Let's give them some time. Now, in doing that, then there's a perception that the regulator is not taking action or the regulator is taking too long. And I think you have, even expressed to me that it was a concern. But it is that mindset that, can we do something? Can we allow the firms to sort themselves out? Mm-hmm. So you tend to give some time. But then it gets to a point where you realize that it's not working, and then you need to take action. So it's not so much of inaction on the part of the regulator, but sometimes you're asking yourself, can something be done? Can the situation be helped? Can some interventions be, brought to the table? So it always is that, the regulator has that, if you like, balancing act to achieve. When do you say enough is enough? And, when do you take the enforcement action? And in doing that, it will be perceived either that you acted too quickly or you are being too slow. But that really is where the thing is. Sometimes you want to give some more time for people to see whether they can.
Some people think that
correct
even within the period of the challenge, you were very slow. And I'll give you an example. You sent a statement on 22nd August titled Public Notice to Investing Public. And you essentially was assuring people that there is no need for panic withdrawals. The Commission is committed to ensuring sound, efficient, and robust markets where investors' funds are protected. Now, this statement could be interpreted to mean that people can still give money to these fund management companies because you didn't tell them which of the fund manager companies were in trouble. This is at August 22nd, 2019. So if on August 22nd I want to give my money to...
That's not exactly correct. Because what we did, and we did this, I believe, in
what is
April,
not correct? The statement I'm reading?
No, the fact that we didn't give any hints about fund managers who may be troubled.
Okay.
That's what I'm saying. Because on our website, I believe it will be in March or in April, we introduced a color coding scheme where we try to separate those who didn't have any regulatory issues or those who didn't have pending complaints from those who had. So that in itself is some information that we are giving. And when we put out that statement, we didn't put out any list. Now, if you put up a list, you're going to cause a run on those institutions.
So did all these 53 who are now down, were they read on your website? Because if you issue a statement and say there should be no panic withdrawals and you are regulating the industry, we do know that you were dealing with some of them. But if all the 53 were not read, if I went to give my money to somebody on August 22nd and the person is now gone down, can I not blame you for my problems?
You know,
you get my question?
People always want to blame.
No, you are the regulator who is telling us that we should relax. Everything is cool.
Yes.
You've color coded companies and said some of them are bad, some are good.
At the same time, we did say that, you know, I think if you read to the end, we talked about some questions that you must ask, because one of the challenges that we find is that people do not make any inquiries. They don't question people. They typically tend to rely on the recommendation of a friend or a relative. The person, oh, this place I've gone and it's good. And then they go, they don't ask questions.
But I need to press you on this, Doc,
but we
because
said that they need to
with all due respect, the
questions. First
time you issued a statement on guaranteed returns, when I say you, not you as a person, SEC, was in 2012, if your deputy is to be believed.
No, that's correct.
If you've issued a statement in 2012 about this kind of behavior that is completely unwarranted and against your best practice, and it's taken 7 years for a company to have their license revoked, and if somebody started behaving in a certain recalcitrant way since 2012, and it's taking you 7 years to now finally revoke a license, can we not say this is dereliction?
It is not, and I'll explain. Because I think I am in a better place to do so. Mm-hmm. Now, I can tell you that when the Commission issued the directive on the guaranteed returns in 2012, I was on the other side, because, you know, I used to work with a fund management firm. So what happened was that the association, the Ghana Securities Industry Association, we decided to engage the regulator, and that's the commission, and we said that, look, the directive to stop the issuance of guaranteed returns could be disruptive. Mm-hmm. So we started engaging, and you know, the tradition of the commission has been to engage with the market. Okay, so we had a series of engagements. We, for instance, tried to explain to the commission that if, let's say, a fund manager is able to, let's say, buy, let's say, a bond, maybe issued by the government, that, you know, and you know, if the government issues a bond, the quality is high, you know, and then decides, or some treasury bills, and decides to strip it and sell to clients, you know, with you know, different maturities, because of the instrument that is behind, we were making the point to the commission that, you know, it doesn't look as bad. Then the commission even also said to us that, look, another way to look at it is where, if you know that you mobilize the money and you're going to take it to a counterparty like a bank, rather than you issuing the guaranteed return to the client, let the bank, issue the paper to the client. Okay. So there was that back and forth, and I can tell that because I was on the other side. And
so at that point, you didn't think that a blanket ban of guaranteed return was working. So when you were at the other side, you sort of had an issue with it.
What we wanted was for the commission to slowly
phase it out.
Phase it out.
But when you became a regulator, I realized how dangerous it was.
Like you said, it's been a number of years. And
by 2015, you issued another release. I think 2015, they issued a release again. And even when you came to office, I think you still said that this guaranteed return thing should stop. Precisely
the point I'm making, that there was back and forth engagement with the commission. Then in 2018, this will be June 2018, and then I was there. Then we issued the final directive on the cessation of the guaranteed products in the industry. And like I told you, I was actually part of the team from the GSIA leading the engagement with the SEC. So with the benefit of what we experienced on the other side, and then coming to the SEC and seeing it, it was clear that, you know, to allow the issuance of guaranteed returns to continue is just setting this industry.
We'll take another break. When we come back, we'll do
a meltdown.
We'll do one question per minute because we have just 10 minutes. So I have lots of questions. I'll do one question each minute, and I hope you can answer them. Stay with us. Welcome back to The Point of View. So I have, how many? 7 minutes. Questions from viewers. Bernard, without mentioning my name, Kindly find out from Reverend what happens to other investment companies like Mega African Capital and Oak Partners, who have refused to pay monies they owe clients. Are these companies not regulated by SEC?
Mega is listed on the Ghana Stock Exchange. So if you're an investor and you no longer want to hold the shares, look for a broker and then sell. Oak Partners is not regulated by the SEC.
Ben, is Reverend saying that even if they are paying, they won't pay everything, meaning we are going to lose our money?
When it comes to investment, Bernard, there's always an element of risk. And once there's an element of risk, you may or may not, have all your money
Will they
back.
get their principals back?
I can't say that for now.
Hey, even principal you can't see. Forgive. Good evening. Please ask Reverend why not bail out these companies rather than collapsing them. Today, world giant companies like GMC, Coca-Cola, Apple were once bailed out. Between 2004 and 2009, the U.S. spent over $500 billion to bail out companies. Collapsing our local institutions is not good. Mustafa from Osei Kusi Lower Manya Krobo. You don't know how to answer that question.
Because, you can always debate it. But like I said, we gave ample opportunity for the firms to rediscover themselves or to correct, their challenges.
We have lots of questions, so let's go through this. Wow. Good evening, Ben. Please ask the SEC boss the amount of pending liabilities to customers and how government intends to pay customers vis-a-vis a government-owned fiscal consolidation. Is it government that's giving the money to pay?
They have committed to give us money to pay. But like
How
I
much?
said, they need to have the validation process completed, and then we can get into the specifics.
Good evening, Ben. Ask SEC why they renewed the license of First Bank on October 14, 2019, only to revoke their license in less than a month. Kwabena Asylum down.
So what typically happens is that before you revoke a license, you go through a certain process. But there's also a time for renewing of licenses. And the fact that, let's say, a license has been renewed and then something comes up, which is a strong basis, you can't say that because you've renewed, you're not
But 14th October is only last month, too.
Yes, that's what I'm saying.
And the sins they committed couldn't have been committed after 14th October.
I'm saying it's a process. It's a process that you go through.
So you license it as a part of just the procedure. You renew the license.
Because, that's, before you take the enforcement action we are taking, you go through various board processes, okay? And then you can take that action. Renewal of licenses, follows a certain normal routine.
Good evening. I think the government is only interested in making its books look good to them, but not focusing on the country as a whole. They are being too hard on local institutions and making the foreign ones gain higher ground. It's so unfair. Ivan Skwe from Oyarifa.
I think the government is trying rather to support in strengthening the financial sector.
Ask your guests if SEC activities is regular monitoring. How come they sit and put about 50 different companies together? Couldn't they have done it case by case after each inspection? This is Koshi Danso. Koshi, actually, the statement mentions everybody's case. So maybe you didn't know this. Each of the 53, there's a statement written by them. So he will answer this question. Ask Reverend how often his team visits and do monitoring of the various institutions. I've asked him that already. Good evening, but I'm loving your show. Can Reverend tell us why they sat down for over 14 months to finally revoke Gold Coast license while they were playing hide and seek with people's investments? Also, Dr. Andrew be prosecuted for mismanaging our portfolios coming from Asante Mampo.
I told you that we engage, we give room, we give rope. We don't, calm down hard immediately. There's an issue. And I told you it can be interpreted as taking too long to take action, or being too quick. But we did a number of engagements, and the whole point about Gold Coast was that they were going to inject liquidity. We kept on asking them for plan after plan and plan after plan. It's clear that after the long rope we had given, they couldn't, resolve their issues, and so we had to do what we just
Kindly
did.
ask Reverend for me which institution manages our pension funds, and are these fund managers part?
The firms that manage pension assets are licensed by SEC, registered with the NPRA. So I believe that if the viewer checks the NPRA website, he will see the list of firms registered with NPRA. But you must first be licensed by us. And I did say that some of the affected firms manage pension assets. You recall I said about 2.5 billion. But
what percentage of the monies they have are pension funds?
But you know, Bernard, the pension funds, there's no cause for alarm because by the structure of the management of pension funds, the assets are held by custodians. So it's not like the fund manager has the assets and then can do anything. Besides, there are very strict guidelines on how pension assets are invested.
Good evening, Ben. I'm Daniel from Takrady. Please ask SEC if CDH is part of the companies whose licenses have been revoked.
Yes, they changed their name to Intermarket.
So CDH is part?
Yes.
Bernard, there are some microfinance companies whose licenses were not revoked by BOG, but the depositors' monies were locked up for over a year. Example is Medi Ghana Microfinance. I would like to know what BOG plans for such microfinance. Cooks, he's not from BOG. We'll come back to BOG. Please ask Bernard, ask Reverend, what is SEC doing to help fund managers retrieve their locked up funds with the receiver and BOG? Mike in Obuasi, a lot of BOG questions coming to you.
Yes, I mean, we've engaged the receiver, we've engaged the ministry, and but interesting, what has happened is that the Bank of Ghana regulated institutions also had money with our fund managers. So there has to be a netting off. And so the receiver has had to do that exercise to look at the exposure of the BOG in regulated firms to our regulated firms. And then, that netting off has
Let me ask two final questions. Good evening. I'm a relative who lives outside the country but has her money locked up. I have a relative who lives outside the country. What can be done for her during the exercise? She's not in the country, but her money is locked up here.
I don't think she should have any problem. We'll give her the details on the validation, I believe, tomorrow process, together with the agent that we have appointed.
When will payment start?
It will have to be when the agent that we have appointed to do the validation has been able to.
Will it be before Christmas?
Oh, I believe it should be. I think that.
Otherwise, we'll have a dry blonya.
I think we'd like people to
enjoy their Christmas.
To enjoy their Christmas. So we'll push the agent to work harder on the validation process.
Reverend Ogbarmey-Tetteh, Daniel, it's been a pleasure talking to you. I wish you well.
Thank you very much, Bernard.
Viewers, if you haven't finished answering your questions, we'll do a part 2. But thank you so much for being on the show. My name is Bernard Avle. Stay with Citi TV. See you next time. Bye-bye.
Point of View is sponsored by Dalex Finance.